Got some interesting developments in Chainlink. While the entire crypto space is pulling back very sharply, Chainlink is arguably pulling back even more sharply than others, but that's not all bad news. We may actually have 5 up. It's not the most ideal setup, but we got something, and something is better than nothing. This is our short-term view, our linear 30-minute chart. And while I have the red highlighted at the moment, we have what could be 5 up. So I'm going to count this from here. So 1, 2, 3, 4, and 5. That's right, 5 waves up potentially, and we may be in the middle of a 3-wave second wave correction. The internal fibs actually seem to fit what we'd expect in a diagonal, and so does the internal structure. Everything has the look of a leading diagonal in that we have an A, B, C, 3-wave pattern up, corrective pattern down, another corrective, possibly impulsive pattern up, another corrective pattern down, and then this could be 3 up. The whole point with diagonals is that the internal structures are usually messy, they're ugly, they don't look particularly standard, which is exactly what we're seeing here. The other rule of diagonals is that you'll often, more often than not, you'll see the 4th wave retrace below the peak of our wave 1. And guess what? That's exactly what we have here. So looks diagonal-like. The other rule finally is that the whole thing will stick within a trend channel line. And well, guess what? More or less did that. Bottom and the top, not perfect, but close enough. This is convincingly 5 up. However, this is not as good as a 5-wave impulsive rally, in which case you have your 1, 2, deep retrace for your 2, your 3, a 4th that does not retrace top of the 1st wave peak, and then you have a higher high for your 5th wave. So this would be more of an ideal impulsive structure. That'd be a very bullish sign. We don't have this anywhere in the crypto space. So at best, what we can hope for is a leading diagonal. Leading diagonals are tricky because they don't look clear, they don't look impulsive, they're not standardized, and guess what? They also look like corrective waves. This could easily be interpreted as a zigzag up. That is what the red lettering notates. You have an A, B, C for your A wave, A, B, C for your B wave, and this could convincingly be an impulse for your C wave. So that is an ominous sign. If this is an ABC up, this is just a 4th wave consolidation in our larger C wave down, which we're going to look at in the big picture in just a second. But that would mean that we are now in midst of the last leg of our correction. And well, if we bounce from here strongly, that could be a very good sign. If we don't, breaking 1355 would immediately invalidate this green pattern. So I'm going to shift over to the big picture just to shed some more light on this thing. This chart, of course, is available in the link, in a link in the description below. So feel free to check that out if you'd like. I haven't changed anything because there's nothing to change on this chart. We have our primary green pattern, and because we didn't break the lower low, I'm sorry, the low of the summer, July 2021 low, it's hanging on by a thread. 1355 is our support. And well, like I said, we may have 5 waves up. It may be a fake out, maybe an ABC. On the big picture chart, it does not look pretty. While it can be convincingly a 5-wave leading diagonal on here on the big picture, little picture, actually an expanding diagonal. Now I look at it, you see how it flares out a little bit, megaphone pattern. We don't see, it doesn't look as good here. So zooming back out, big picture, here are our parameters. Again, 1355 is your main support. I'm actually going to thicken that just to emphasize it. And well, we can't break through that. If we break through that, green is immediately invalidated. We are heading directly to that purple box below, which could take us down to between 971 and 574. In theory, it could pull down to 415. I don't see that happening because we've already come down a long way. And well, depending on how we look at this thing, if you do a 1-to-1, 971 is your most likely target, some of that box. If you look at the internal wave structure, this should be a 5-wave impulse or diagonal down. The way I'm counting this is that we already have 1, 2, 3, 4, 5. The thing that has the optimistic thing here is if you look at the internal structure, the rule in Elliott waves is your 3rd wave can never be the shortest of your 3 motive waves. So out of your 1, 2, 3, 4, 5, you would never have your 3 be the shortest. So let me demonstrate here. If that is the origin of our 1st wave, that's your 1st wave down, 2nd wave up, 3rd wave down, 4th wave bounce, 5th wave. I'm going to move this thing just to make it more legible. Your 3rd wave cannot be the shortest because that's incorrect. So what that means is that our 1st wave is already the longest by far. Our 3rd wave is shorter. Therefore, our 5th wave must be shorter than that. So with that logic in mind, that does mean that, well, it's very unlikely that we go too low. This purple, the top of the purple box is probably the most likely spot for us to fall if we do fall to that. And well, if we look at our Fibonacci extension proportions, which I don't know why they're like that. If we look from here, assume that's a fourth wave bounce or 0.618, we'll probably extend a little too far. 0.382 is another common extension. There's a chance that's all we get. Again, I'm going to be looking at all of this with regards to how Bitcoin and Ethereum are performing as well. Those do have a good ways to fall, but as I mentioned, there's a chance for shallow retrace in Bitcoin. Maybe we don't go too far below 30,000 there. Ethereum, maybe 1900 is all we get. In that case, we may not make it down the purple box. Regardless, it would be a great buying opportunity. As I've mentioned, we are much closer to a bottom than we are to the top. And Chainlink has one of the most, well, the one prettiest patterns there is. You look at this thing, you have a 1-2 here, clear 5-wave impulse. It is very convincingly a first wave, which means that the pullback we are currently in is a second wave. And what comes after a second wave? A third wave, which is the best wave to trade in Elliott wave theory. Where would that put us? Well, depending on where we actually bottom out, I'm actually going to change some of the projections here because I don't think we're going to follow the bottom of the box. If we get to that top of that box, our first wave would fall somewhere between $88 and $344. So I'm actually going to draw a box there just to help us visualize where we would end up if we have a strong reversal once we fall a little bit. So that is what we're looking at. Just giving a nice aqua blue box. That is where your ideal first wave target would be. And well, that's a long way up from here. The bottom of that box would probably give a 5x plus return just on its own. Where will the third wave go? That would go much higher. If this is the second wave, and well, we're having a shallower than expected non-standard second wave retrace, well, let me just put it this way. 1.0 would be your minimum third of a third wave target. That puts us at $3,100. That sounds absurd, but Chainlink has done crazier things before. I've said the same thing about a lot of the other altcoins. As crazy as some of these rallies sound, they're not as crazy as what we had seen in 2020 and 2021. And those rallies are not as crazy as the rallies we saw way before, back in 2018. We went from, what, 12 cents all the way up to $1.41. It was that 12x return right there. And that is with Chainlink, which doesn't have as long of a history as some of the other coins like Litecoin and Dashcoin, Bitcoin, Ethereum. Those had much crazier rallies back then. So don't ever underestimate what these things can do. I'm going to have some videos out there highlighting which cryptos are best in terms of risk and reward. So stay tuned for those. Subscribe so you don't miss those. And if you like one crypto, one altcoin, buy a bunch, buy 7 or 8. Don't just buy one. You never know which one's going to outperform. So be greedy when others are fearful. I think there's a lot of fear right now in the crypto space as well as the equity space. So get ready to buy. So until next time, thank you for watching and happy trading.